Well, good morning. Welcome to this edition of our weekly Ag Market Network market report brought to you by FiberMax and Stoneville. Seed exports have just come out. Let's take a look at those right now. Cotton, we'll start with cotton. 50,700 running bales. That is a marketing year low, down 67% from the previous week, 76% under the 4-week average. China took 17,800. Mexico took 15,200. Taiwan took 3,800. We had cancellations, and they weren't big, just a few here and there. The 2018-2019 net sales, the new crop, 152,200. For Thailand, China, and Vietnam, those were the biggest takers. Actual shipments of 403,000 running bales. Now, the cotton market before the report was up 34 in July. It's right now up 9. December cotton was up 75. Right now it's up 58. So a little bit of a negative reaction here so far. We'll look at that in just a few minutes. Soybeans, 139,500 metric tons, down noticeably from the previous week. Pakistan took 248,000 metric tons. Bangladesh, 173,100. Indonesia, 81,000. We had large cancellations of about, if I'm reading this right, 894,500 metric tons. And 2018-19 new crop, 6,900, not very much. Reaction in soybeans, beans were up 7 3/4 before the report. Now they're up 7 1/4. July corn up 2 1/4 right now. Let's see what the market's doing. Net sales, 854,300 metric tons, down 13% from the previous week, but up 3% from the 4-week average. Japan took 326,900 metric tons. South Korea, 223,300 metric tons. Mexico, 150,800 metric tons. Corn before the report was up 2 3/4. Right now it's up 2 1/4. Wheat, net sales of 112,300 metric tons, up 78% from the previous week, but down 29% from the 4-week average. South Korea took 75,200 metric tons. Guatemala took 22,000 metric tons. And Guyana took 18,500 metric tons. Wheat was up 7.5 before the report. It's at the same place. Let's talk a little bit about what's happened here recently with the markets. We've had a lot of news here over the last week. Let's look at cotton and talk about the 4 different factors affecting that market, or what has affected it, what probably will continue to affect it. Number 1, bad weather somewhere in the world that grows cotton. We've heard about damage to cotton in China. We've seen that India is well behind what is their optimum planting date for a large part of their cotton. And then we've had the dry weather in West Texas. There's been some rains lately, but still on balance, it looks like that's a crop that's very challenged as it gets started. And then, of course, we've got the large speculative buying talk that hedge funds in China and also hedge funds in the U.S. were buying cotton as we were moving up. Mill fixations are still there. We certainly know those have been taking place here recently. And then the Chinese trade agreement had a lot to do with this also, that we seem to have come to terms with China. The details are still to be worked out, but they seem to have come to an agreement, and that's positive for anything that's exported out of this country to China, and certainly that is cotton. Forecast. Well, the forecast is for old crop possibly to get up into the 90s, maybe the low 90s. New crop maybe can continue to move and get up toward the 88 level, but longer term, if we remain dry or we continue to have problems growing cotton somewhere in a major cotton producing country in this world, then cotton can continue to move high. And that magic level of $1 is even possible if we continue. Now, that's a big, big if. We need to know when we're talking about weather, we're talking about something pretty darn unpredictable. As far as what to suggest, well, it's a broken record there. For some time, it's anywhere from 25%, in some cases 50% people have advised that. for farmers booking crop. I think recently everybody is frozen at where they are on those levels. In addition to that, there are people that have booked their crop before now that are even looking to buy calls to hedge the upside against what possibly could be, if the weather persists, a very big move continuing in the cotton market. Let's look at grain, soybeans, corn, and wheat. The news there is similar. The Chinese trade agreement is very much the positive for those markets. Also, some weather concerns lately have been a positive for soybeans, corn, and wheat. As far as what to do or where we think this market can go, and this might be somewhat shocking, but we're testing long-term highs now. The way the technicals look on the charts and the optimism in the market, and the price action in these markets, there's some talk that November soybeans that are right now trading at $10.57 could visit the $10.75 to $11 level for November soybeans. December corn right now trading, and December corn up 2 at 428.5. That market could reach into the 445 to 450 level. Wheat right now trading at and we're looking at September wheat at 555.25, and there's a possibility that that could get even up towards $6. As far as what's analysts have suggested, as much as a third priced in November soybeans and December corn. I would think if you get to these higher levels, you should at least ratchet that up to 50%. Talk has been for some time to be priced 50% on wheat. And then, of course, we're getting closer and closer to harvest. So at these high levels, a farmer might even want to consider doing more than that. So one last look at the market. I see the cotton market has continued to lose ground off of these light export figures. Right now we're down 3 in July cotton at 86.93. We're down about 47. We're up 47 in December cotton at 84.53. We have soybeans up 8 3/4. That's a penny higher than they were before the report came out. Corn is up 2.5. That is pretty close to where it was before the report came out. And wheat has firmed up. We've rallied about a penny since the export report came out. That's it. Thanks for being with us for this edition of the weekly market report brought to you by FiberMax and Stoneville Seed. We'll see you later. Thank you.